Hi everyone, James Maggs here from the Infinity Wealth Real Estate team. And for today's video, I want to take you through something a little bit different, and it's going to be a client success story, which is an actual success story from one of our clients. We do have a ton of very successful real estate investors as our clients. What's interesting though is oftentimes we don't see through that whole success cycle because a lot of investors are holding for the long term. You don't actually see the sales. And when somebody does sell a property, it's often for very different reasons. In this case, the investor is looking to, they've been invested for a while, they're looking to take some of that capital and use that for retirement. So they're kind of at the end of that acquisition phase. They have other investments that they're using to take advantage of the cash flow. And for this instance, this was the one property in their portfolio that they figured made the most sense to sell. And so I want to take you through the numbers from start to finish so you can kind of see what real estate can do for you in a relatively short period of time. Now, it's not overnight, but in this case, we're looking at actually like a 10-year cycle. So what I'm going to do here is I'm going to take you through the numbers using our property analyzer or the cash flow calculator. Any of our clients have free access to this. So if you're interested in learning a little bit more about it or how to run the numbers yourself, I'll kind of take you through it today as well. But if you're interested in getting it for yourself, you can reach out to our team. All right, so we have here, it's a very simple spreadsheet. And what we're going to do is anywhere there's yellow highlighted cells, that's where we are going to input the data that's specific to this deal. So this one happened to be a McMaster student rental in the city of Hamilton. And the client of ours, they were all in on student rentals. So for all of their other properties, they're student rentals in that same area, so that they kind of tackled that with that one mindset, and they were extremely laser focused on student rentals. They've done all the property management themselves as they were fairly local and in order to reduce costs. And because they got so good at it, they felt that they could manage the properties even better than a property manager would because they can focus on things 100% of the time. So to take you through some of these numbers, again, this was purchased 10 years ago. So the numbers were quite a bit different than they are today for a purchase price of $320,000. Just quickly, as you can see, a lot of these numbers are auto-populated. So the spreadsheet calculates that for you. In this case, it happened to be a 7-bedroom student rental. Now, the rents changed over the years. I think they did end up getting a little bit higher, but from my understanding, the average over the course of the hold on the property, because they did a nice renovation, which I'll get into in a second, the rents were quite a bit higher than even back then. So we're looking at about $3,500 a month in rent. So if that's 7 rooms times 5. And then they put 20% down on this property. So back then it was about $64,000 for a down payment. Legal fees were approximately $1,500. There was a home inspection of $450. And then what they ended up doing was adding a kitchen to the basement, cleaning it up a little bit. I think there was a room upstairs that was a living room that was cut in half to add another bedroom. So it ended up being 3 bedrooms up and 4 bedrooms in the basement. So that renovation cost approximately $50,000. So if you look, the entire investment for them cost them about $120,000. If we're looking at what our mortgage costs were in this case, it was about $256,000. That's 80% of the purchase price. Again, interest rates kind of have gone up and down over the last 10 years. Obviously, there's been a lot of changes. But if for the average investor, if you had locked in at variable over the course, you're probably looking at around 3%. I know we saw anywhere from 3.5, 3 3/4 at one point, all the way down to, I know myself personally, I have a variable rate mortgage of 1.25% right now. So 3% is a good average, just to give you an idea of the past decade. That gives us a mortgage payment of about $1,079. Where this property is, property taxes by McMaster are actually a little bit higher than average, even up on the Hamilton Mountain or in the lower city. We're looking at about $4,000 a year, which works out to about $333 a month. Insurance for student rentals is about $125 a month, depending on your insurance provider, give or take a little bit here and there. Maintenance, even with students, for any of you student rental investors out there, it really does depend I've several student rentals myself. I find that with the right students in place, you oftentimes don't see a lot of repairs, even with tenant turnover. It really all depends on how it's handled. But just for the sake of this example, we're going to say approximately $200 a month, which works out to about $2,400 a year, which would cover, paint and a little minor wear and tear between tenant turnover, stuff like that. Property management, there was no property management like I had mentioned in this case. So we're going to leave that little bit that blank. Vacancy, they didn't have any vacancies throughout the life of ownership. They were really good at getting these properties filled months in advance prior to the tenant turnover. McMaster's cycle happens to be usually the leases are 12 months from May until the end of April, and the tenants start looking again for May 1st leases in December and January. So this investor was able to always have the properties filled in advance. But having said that, just to be a little bit more conservative, let's put, I think 4% is the traditional average that we're looking at for people who are wanting to factor in at least 1 month of vacancy throughout the course of every year. And in this case, the other for us, in a student rental, the students do not typically pay for utilities, so we would lump those in. Typically, there's a cap of about $350 a month on utilities. So as you can see, when you sum all those expenses up on a monthly basis and you subtract it from the monthly rent of the $3,500, we're left with about $1,272 a month positive cash flow. So as I said, this investor held this property for 10 years. So what we're going to do is we're going to look at this 10-year column here. And that shows me that over 10 years, their cash flow total was $152,683. So that's the one piece of profitability that we look at as real estate investors. But there's two other components which you might or may not be aware of. I mean, I've got them up here for you in this property analyzer, but the second piece, which is a piece that oftentimes is not really well understood, is the mortgage paydown. So to give you a bit of understanding, every time you make a mortgage payment, part of that mortgage payment is principal, which is the amount you borrowed, and part of it is interest, and the interest is what you owe the bank. And so in our case, the $3,500 paid for by the tenants 100% covers the mortgage payment and then some. We've got some left over. We've actually got an amortization schedule built into this spreadsheet. I don't want to go into it in too much detail, but if you look at this here, you can see the breakdown of principal and interest. And this changes over the life of the mortgage, but it gives you an idea of how much is going to each component. And so as you can see, over 10 years, $61,525 is being paid off of the mortgage, and that's being covered by the rent that your tenants are paying. And then lastly, we've got the, in this case, biggest component to the profitability, which is the equity appreciation. And equity appreciation is the amount of increase we see in the value of the property between the time of purchase and through the time of sale. Traditionally, we would see an average of anywhere between 5 to 7% annually. In the last little while, that number has gone up quite a bit, but in this case, we have actuals, so we're not going to guess what that number is. I know what that property sold for because I was the listing agent. So we sold that property for a fantastic price of $1,010,000. And so what we're going to show here as our profit on appreciation is $1,010,000. Let's take away our initial purchase price of $320,000, and we're left with a $690,000 of appreciation. And so we're going to put that down here. All right. So as you can see, those are the three components there. Now, there are some other expenses that we need to factor in when it comes to our overall profitability. We do have costs when we sell a property. There's the buyer agent that needs to be paid as well as the listing agent. In this case, it was approximately 5% of the sale price. So I can do the selling costs, and that is equal to our selling price times 5%, which in this case is about $50,000. There are some purchase costs, which is typically about 2% of the purchase price. That includes land transfer tax on the purchase side. So in that case, we're going to do that $320,000 times 2%. That equals 320 times 2%. All right. And so now it's easy enough for us to do a quick formula. We're going to say this, the cash flow, 152,000 plus the mortgage paydown plus the appreciation, take away the selling costs, take away the purchase costs, and we're left with a net profit of about $847,000. Now, this property was fully tenanted, minimal repairs and maintenance over the life of the ownership over 10 years. And like I said, these investors are pretty sophisticated, and so they were able to really understand the student rental market. But as you can see, with a very, very low, from an investment side, investment of approximately $120,000, they were able to return $847,000 on the sale. If you look at, if I were to pop this in here, it gives us a rough idea of what the return on investments is. 847,308. So as you can see, we're looking at about 71% annualized. Now, this is an average. It's just taking that 710 and dividing it by 10 years. It's not truly linear because there's going to be some compounding interest and stuff like that. But just to give you a rough idea. So, from a passive income standpoint, real estate, while we call it passive, there really is a large active component to it. You got to work with your tenants. You got to look at rent collection. You got to look at, if you do have any evictions, maintenance, repairs, stuff like that. So even though we call it a passive investment, sometimes it isn't. But you can see just how profitable that is. Compare this, if you took that same $119,000 and you invested it into, say, stock market, and then if you look at traditional average Standard & Poor 500, S&P 500, the target, they say, for a lot of people is 10% annually. In this case, we were able to hit 71%. And not only that, we were able to use leverage to our advantage because we're borrowing the money from the bank in order to take advantage of bank's money, and we're earning interest on that. Okay, so I hope you found that interesting. Not only both the success story on how just one piece of real estate can change your life, and I know a lot of times people get caught up into some big stories on what you kind of hear success stories, and you really don't know how true or accurate they are. This sale just actually happened last month. And so I thought it was a good opportunity for you to see actually what investors are seeing in today's market. I hope you found that interesting. And if you're interested in learning more about our success stories and what we can share with you in order to help further your real estate investing career, if you want to like and subscribe, we're trying to get lots more videos like this out. That's it for now. Take care.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link is also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.